Doing well. Hello, everybody, on a terrific Thursday. I am your host, Sweet Bobby. I am the worst trader on the planet, but I ain't as bad as I used to be. According to last week, though, I was pretty darn bad. But hey, we're shaking it off and we're doing good. Jim B is with us. We got Austin with us. We got Brad. We got Bruce. We got Chain. We got Daniel. We got DB. We got DMT. We got Dwayne, who's always here. We got Glenn and Hal, who's always here, and Jason and Javier and John and Joshua and Lee's iPhone and Matt Jolly Wally and Matt G and Mo and Schwaz and Scott and Stephen and Thomas and Tim and Tyler and Vicky and Yaz and all of the gang. Hard time hearing me there. The music was plenty loud. Can you hear me now? Let me turn this up just a little bit. Make sure you hear me fine. Got it up a little louder. Is that better? Good. Good, 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 good. All right, so good to see everybody here. Let's look at the market, y'all. Oh, what I should have played is Little Texas, what might have been, but that was then. Looking back on that horrible, horrific day of, what was it, August the 5th or something, when the market went down, and now the market is uncontrollably up again. It's got all of us talking about doing the 111s again, all of us talking about going back into the water, and y'all, the market is hot and heavy. VIX down to 15, AD 296. Everybody and their mama is back in like ain't nothing happened. Look at this. Now the AD has smoothed off a little bit, so we're probably at a lunchtime chop. Look at the big green monster. Yesterday I told you, I said we're going to the 55.29, and indeed that is the area of support, but we are now overbought for the fair value zone below. By the way, by the way, um, so anyway, my plumber came by. We've had this toilet that wouldn't flush for about 3 months. And it's because my house was built when James Buchanan was president of the United States in 1860. And my house has survived the Civil War. The soldiers actually camped out in front of my yard here at the old home place built in 1860. And this house may not survive my kids. But anyway, we had a new toilet put in that won't flush because it didn't have a vent on it. And I'm the one that figured out, hey, there's no vent to the toilet. So he had to put a vent in. And he comes up this morning and he says, oh, I didn't think you'd be here. And I thought, why? He said, well, your wife said that you and her were no longer together. I said, my wife said, what? I said, Beth said that we're no longer together. I said, well, she hadn't told me that. I didn't know that she left me. So y'all probably thinking she left me over the amount of money that I lost last week. But no, I called Beth. I said, honey, is there something you won't tell me? She said, what are you talking about? She said, I said, well, the plumber thinks you and I are no longer together, that we are separated. And she said, no, she said, he called me and asked, was you there? And I said that you were not with me. And anyway, he took it that we were no longer together. So it looks like I am still, was I there to witness? Sometimes I feel like it. Oh my goodness. Sometimes I feel like it. My cousin's got a metal detector and he's trying to find old bullets and things in my front yard and stuff, and artifacts from the Civil War, or shall I say the war of northern aggression against us Southerners. So anyway, glad that's over with, and hopefully we'll never go through another civil war again. But do you notice that half our country hates the other half and the other half hates the other half? I mean, come on, we used to all be Americans. And I'm proud to be an American, where at least I know I'm free. So anyway, so the market is up. We are overbought, and we should see a pullback back into the fair value zone at some point in the next 10 days. This is our 10-day outlook here. Now look at this. I drew something on the linear regression. Look at this, y'all. This is just a parabolic rise here. This is not sustainable over time. Now, we went through a parabolic low where the market was making new lows, right? And now we're going through a parabolic up move in the market. But it's just kind of neat to find all of these things. And at some point, this thing will puff out a little bit, and then it'll take a break, and then it'll either continue going up or coming back down. But it really is interesting that the market is just, ever since that dreadful day when we had to puke positions because of buying power, that the market has done nothing but just go up. So let's see what we've got on in our little account here. So in our little account here, why is that making me save a copy? It won't let me do my thing. Let's see what I don't think there's a need to revisit our Greeks and ratios today because we're really not going to do a trade. We're just going to more or less look at what we've got on. And all we've got on now is, let's see, trades here. We closed the strangle. So we've got a black swan hedge of 2440, y'all. 2440. Now the problem is that's going to be negative theta, and it's going to be negative delta, and it's going to be that negative theta this is actually true theta, because it will actually eat up the amount that we've got this hedge on, which was probably what, $2,200 or so that we spent on that hedge. That will come out of our account over time as the market goes up. Now we've been in that hedge for 9 days. Recall that if we go 24 days without starting a new tranche, then we need to just buy a new tranche outright, wherever it's at. So we've not had a chance to sell any naked puts or anything. So yesterday we did a 111. So let's just see. I guess we could see how the account's doing. I guess we could update it. Let's see. Today is, now I'm undecided on my other account, y'all. I kind of want to do it as a Doomsday account and do nothing but hedges on it. But then there's a part of me that wants to pop back into the 111. I just don't know what to do. What would y'all do? Maybe would you keep it as a Doomsday account, or would you pop back in and start doing the 111? Because it's hard to do an account where you just do nothing. Let's see what our little net lick is here today. Log me in, baby. Log me in. 199, 794. 199, 794. Fire up the band, Rico. Rico, don't give me troubles this week. I know you. I know. Come on, fire up.
Well, we're moving on now. We're moving on up to the side. To a deluxe apartment in the sky.
He's sitting there saying, Bobby, you know you're really not up for the year, though. And I'm like, yeah, Rico, but play the darn music anyway. We're up from where we were, right? So 199, 794. We're down 1736 since we started the hedge. That's all theta decay on the hedges. So let's see what our Greeks and ratios are today. So our Greeks and ratios are, let's go get this one and log her back in. Oh, what might have been. Let's see. So we are up, let's see, this account is 22 delta, negative 8 theta. So we're slowly getting our theta back up. 22 and negative 8. That's much better than it was yesterday. Negative 40, negative 8. And the VIX is, I think, in the 15 handle. VIX is 15. VIX 15. And our buying pair usage is not a lot. Let's see. Let's go to cap requirement. And we'll go and update it all. And go cap requirement here. And it is 34, 32. Now, remember, this is a new rule that we've done. I would trade it, but keep it small because of market overbought. You're right, Schwaz. Can you calculate the return on, is it either worth doing or not? You're talking about if I just do it as a hedged account, John? Well, hopefully it is, because hopefully I'm going to grow my hedges. That's what I'm hoping to do. I hope to have tons and thousands of them on by the time the next thing comes, and just basically shaking my hands and, but I don't know. I don't know if I've got that patience or not on that account. We'll see. So buying power requirements, remember, we're going to use whichever the one of these is higher, the initial or the regular requirement. So I'm going to use this one to be a little bit more conservative, right? That's what we decided coming out, is we're going to use this one, whichever one is higher, to be a little more conservative. So let's say 42.62 is our buying power. Going to be a little bit more conservative this time. All right, so we are at 2.13 on our little thing there. So not bad at all. Everything looks really, really good. We would love to get that theta up positive, but I don't really need to put on a new trade today, especially since we did one yesterday. But let's look at maybe we'll look at the other account. First of all, let's look at our little thing, though, and how hedged we are here. So let's go to risk analysis, and let's do this. So what we've got on is a 2440 black swan hedge, right? That's 8 tranches there, right? 8 tranches, 8 times 3 is 24, 8 times 5 is 40. I'm having a rethinking of the effect of the PDS versus the drag on the tail profit, especially if you're loading up on SBH. Well, Schwaz, a lot of us basically had that uh, uh, problem and thought about it the other day about taking it off. And then it was only after Tom King talked to me and said, basically, look, Bobby, it was working great. Why take it? Why go another direction? Just hedge more and be a little more conservative with your buying power. So we'll see. A few days ago, you briefly displayed an old write-up for a diagonal Sweet Bobby hedge. Is that stored on Discord? I think didn't I put that in somewhere, y'all? I think it's under the Sweet Bobby Hedge channel or the Black Swan Hedge channel. Let's see. We got, if we can find it here, I put it there though. Let's see. King's Court. We got all kinds of stuff. Trades, AIM, Trade Line, Nancy. Sweet Bobby Hedge. I think I posted it in here. Let's see. See if I can find where I posted it. It's in here somewhere. If not, I will find it. Let's see. Man, we got a lot of discussion going on. Do y'all see where I posted it there? I'll try to get that up somewhere. I thought it was there, but we'll see. Well, let's see. Was it? Let me keep going a little bit. But I swear I thought I posted that. Anyway. But, you know, I still am like with the diagonal, I'm just not as comfortable with it. If you're just using it as a hedge account, are you only going to spend the amount you received from bill dividends? If so, then you won't have drag on your account, correct? That's the plan. That's what the plan is, Joshua. The plan is to do those trades so that it's at a break even, right? And we'll kind of go over that in a second if you want to. So this is nice though, y'all. Look, I'm fully hedged to the downside. If we have another down day of 4% and VIX goes up 40 points in a day, I will be up $5,181. If it goes down 20% and VIX goes up 40 points, we'll be up 21,000. Now, a lot of people are saying, Bobby, can you trust this thing? Yeah, this is all I got. This is all I got to kind of give me maybe I'm up 23, maybe I'm up 19. You know, who knows? But this is the best that I have. How many hedges per 111, 112 again? Okay, if you want to be perfectly hedged and you can't buy this many, okay, Daniel says we can trust this, it works good. How many hedges per 111, 112 again? It's three 111s in the E-minis, not the micros. It's one 111 to 3 Black Swan hedges. And you just can't buy that many hedges. So what I've done in the other account, let's see if I can open the other account here. And let's see which one it is. It is the reset new. And all this account has in it, well, I did a naked call and I did a strangle on them. And I think I closed those. Let's see if we did. I should have put them in here. Let's see. But all I've got in this is a 1220. I think I closed that naked call and that strangle. Let's see if I did or not. See what we've got in this account. Let's see. Which one is this one? This is this account. This. Let's see what I got over here. Positions. Yes. Yeah, I closed those out. I think I closed them out for profits because the volatility's been going out. Even though that short call was, you know, the market's been going against it, it made money. But I think what I'll do is just take those off like I didn't even trade those things. Let's see. Let's just get rid of these two here. The naked call and the strangle. There. And just this. So now in this account, all I have is the Black Swan hedge. Now the problem is I'm gonna lose that $1,100 in this account. Well, it says I'm up 625 today, but that's all I have other than bill in this account. Let's see what this one looks like. Account requirement. Account requirement. Where's it at? Okay, this one looks really good. So here's my cap requirement again. Let's do it here. We've got our hedges in. Let's update that. So it looks like I've got about $27,000 of crash protection in this account, which would be nice. So I think what I'm going to do, for those of you that want the trading plan, The latest trading plan is available on the YouTube channel. It's the one that includes the 111 and the lower buying power and everything that we're doing. But I think what I'm also going to do is do a Doomsday plan as well for those of you wanting the Doomsday plan. And the problem is you have to be patient. I mean, you're basically waiting for the world to drop like it did the other day. And that is hard to do. But if you can do it successfully, let me show you what it looks like. So here's what we are going to do. Read all this kind of stuff. Let me just talk about it. In that account, I'm hoping that my hedges are free. So initially, where's my pen at? Where's my daggone pen? Oh, let me close this out. Let me back up. Stupid thing. Turn Microsoft product. See if we can get in this thing now. Why don't you like the initial to be a diagonal as much, Bobby? Austin, I did it and it worked good in 2000 and whatever, 2020 when the COVID hit, it did. And I guess you could do it diagonally. Slow or no internet? Why do you need internet for the whiteboard? It's on my computer. Hold on a second. Let's do a new whiteboard. Start with a blank canvas. All right, out of thing. So what we do to start is you do 12 shorts and 20 longs. Heck, I may even start a diagonal one just to see how it does. And the shorts are sold at $3 at 120 days. Now, you got to make sure they're 50 wide strikes though. If they're not 50 wide strikes, then 100 wide strikes won't do it. You got to have 50 wide strikes. So right now you got to come into 92 days to find 50 wide strikes. And you buy the 20 when you 50 points below the shorts. And this gives you net 8 puts. Everybody see that? You're short 12 and you're long 20. So that means you're net long 8. So then what we do is 2 red days. Now we don't know what those are because we don't have them anymore since the crash. 2 red days or 1 day down of 0.4%, not 4%, 0.4% or more. You're going to sell 3 more puts. So I'm still waiting on 1 down day. We hadn't had 1 down day, let alone 2 down days or a down day of 0.4 or more. Now, here's the deal. If you don't do this within 24 days, see, I've been in this trade now for 9 days. If this doesn't happen in 9 days, then I'm going to have to buy another complete tranche. And that's going to cost me about $250. So what does that look like? Well, what that looks like is, let's see, if the market goes down, let's pretend the market was down 0.4% today. Then what we would do is we'd go out 60 days or more. So we go to 65 and we go down to the one that's about for $3 and we sell those, which would be the 3850s. You know, you might could do the 3800s and see how they're 50 points wide. So we sell 3 of these. Now you're saying, wait a minute, Bobby, you're naked. Well, not really, because now instead of 0.8 or of 8 long puts, you have 5 long puts. And what does this look like? Well, let's go back and see if we can figure it out. Go to cap requirement. It's not as good as it was. So right now we've got $27,000 worth of protection. What if you add those order legs? Well, it's not good at all, is it? It's the negative 16,000. So I've even got to think about that because these have got so weak apparently. So yeah, I guess you are net naked for a while. Let's see if we go down on this. What does that do to that? If we go to 25.
Now, Bobby, did you go 60 days?
Yeah, I went 60 days.
Is it normally longer than that?
You can do it longer than that. But normally, what I do on my second tranches is I try to go up to 60 days because I'm waiting on that GTC order to fill, and the decay at 60 days is better than the 120 days. But you're right. See, this is another problem, y'all. We're not truly even hedged then. You still got risk while you've got those other three on. So let's see how far we are from harvesting with these updates. Let's see what these are up. I think they were at 80 cents yesterday. So we've got these working orders, right? We've got these working orders. Yeah, see, it's not far from me harvesting those 12. And then I'll be left with the 20. Now that'll be kind of cool. And then that'll probably be the defining moment where I can actually go out and sell my three. But I'm going to have to look at this thing because that doesn't look good at all. It doesn't look good at all. Because really you're sitting there going, oh yeah, I'm fully hedged, but now we're not really fully hedged. 2, 1. Yeah, we're not fully hedged there. What you could do, I suppose, is I guess I could do my three if I wanted to at least keep it going and do my three in the micros, which might be better. But we got to take a look at this and you got to say, okay, I know that I'm going to have a risk. If we go down this much, we go down this much. I've got some naked exposure here. And that's what we're trying to do away with is that naked exposure. So you could probably do one in the micros, at least just to keep it going here and still have protection on the downside. Let's see what that looks like. Let's take the order leg off. Let's say if you all of a sudden said, okay, Bob, let's go over here and let's do it in the micros. And we did trade and we clear this and we go 60 days or more, 64. We go and do the $3. I didn't think you'd be here. I thought your wife said y'all weren't together anymore. He looked like he was kind of happy, like he was trying to make a move in on best or something. I thought, listen, pal, it's still my wife. All right, so let's look and see what this looks like. So we sold 3 here, and then you would still have protection, and you'd at least be working on some more hedges. Let's see what this looks like now. Let's go back to this little thing. So we've got, let's put this back at 40. You got that $27,000 of protection. Then if you add the order legs there you go. There you go. You still got 23,000. So that's a way to keep doing it, and just do it in a smaller product. Because I'm telling you, I don't want to ever be caught with my pants down again. Right? You're like, that's terrible. It's kind of like when I was coming home from Birmingham and all of a sudden the move of the spirit come on me. And I thought, Lord, I remember going across Crumley's Chapel, the curve of Crumley's Chapel Church of God. And I thought, Lord, I don't think I'll ever make it home. That Taco Bell that I had on the way home was, woo, Lord, have mercy. And you get caught with your pants down. And so I come down into the backyard and I was on 2 wheels. And I'll never forget, I was squatting in the backyard and there my neighbor was out on the porch just smoking a cigarette. Hey, Bobby, how's it going? Here I was with my pants down. I thought, after that, I said, I'll never get caught with my pants down again. And then here we got caught with our pants down. So this is a way that we could start it and keep things going, right? Keep these little hedges going without sacrificing our hedge power. So we can do them in the micros as well. Now, I know
Bobby, what about doing just one ES and then when that gets half price, buy 2?
Yeah, you could do that. When the price continually goes down, and that's another way you could do it. I didn't thought about that, Hal. That's good. Yes, Wash says something else. You could harvest 6 or 3 to give you some breathing room. Yeah. And the diagonal seems easier to keep up with, Jim says. Start with the credit, not waiting for the buy order. Yeah. Let's model it if y'all got a second.
I got another question, Bobby.
Yeah.
Oh, what about every time you put on a 111, you buy a VIX call?
You could do that. How much would a VIX call be? It cost me about $50, right?
It depends on which one you buy. Yeah, but about $50.
Yeah, about $50 to do that. That'd be interesting. See what that would do. Yeah, I mean, all different kind of things you could do. That's good. You've been thinking about that, Hal? That's kind of good.
Yeah, I put on a couple so far.
Yeah, we just got to be a little more conscious of that analyze tab of whatever platform. What platform are you using, Hal? What's your main platform?
I use both.
Okay.
Use Thinkorswim and Tasty Trade.
So what's this, y'all? If you were to say, let's do the 64, and this is what the diagonal looks like, y'all. This is kind of cool. So 64 at $3, 3,800s. I think I still got that hooked to 10. Let's say 10. Yeah, let's do 3 of those. And analyze trade. Analyze and look down there, make sure that's the only thing we got. 3,800s. All right, so there's the 3 shorts at 64 days. And then what you do is go into about 30 days, 34 days. And you buy the 37.50s. Now, the cool thing is you could actually buy, see, this is what everybody's saying. Hey, wait a minute. Instead of $1.55 there, what you actually could do, everybody see what I'm saying? You actually could go up and get you a better strike too. So you could say, I'm selling them for 3. I'm going to buy this for $1.50. You can go up to the 4,000s. That's kind of cool. Let's do that. Let's see what that looks like. 3, 4, 5. And you got that trade put on for a little bit of a credit. Let's see what this looks like. All right. So you buy the 5, sell the 3. You see your 4,000 is there. Let's see what kind of protection this gives us. Let's do fall steps 4. Change this to 10. And let's see what it looks like at 20% out. So there's 5, 12, 15. Okay, let's pretend worst case scenario, you're going to get $18,000 worth of protection. Y'all remember that. And then let's go back to the trade tab. And let's go back to the 64 day. And let's buy the 37.50s. And see how much protection we would have got there if we'd have done it in the same expiration. 6, 5. Analyze trade. Change this to ES. And let's take this one off. So we got the 3,800, 37.50s. Let's see how strong this is. See the difference in the two. It's not that bad, y'all. You know, from $18,000 worth of protection to $25,000 worth of protection. Pretty good. You know, I'm thinking I may even do something like that. And then what you do is you do the GTC order on the 37.50s to buy those at $1.55, and boom, as soon as those fill, go out and, you know, to 30 extra days and 60 days or whatever, and sell another 3. That's what you do. That's cool. Now remember, it was my friend and I that came up with this. This is not a Ron Bertino thing. We said, let's diagonalize them. And I was like, it might work. The analysis tab says it works. I'm not sure that it'll work. And then I put a bunch of them on, and I'll be darned if it didn't work in 2020. And I was up 208% when all that was said and done. So yeah, it can work. It's a good way to get started. You know, good way to get started. And then put your GTC on and be done with it. So I may do that tomorrow. We may look at that tomorrow. I may go in and put one of those on. See how it works. All right, guys, if you can find $3 BSH puts, you could also outright buy 2x BSH tranche with a naked put for similar cost to the PDS. Yeah, there's all kind of things to look at, right? You can find $3 BSH puts. You could also outright buy 2x BSH tranches with a naked put for similar cost to the PDS. Yeah, because the PDS on ES is going to cost you $500, and that's the same amount of cost as it would be for 2 tranches of the BSH right at. Yeah, that's a good way of looking at it, and just not do the PDS. All different ways we can skin this cat. All different ways we can skin the cat. All right, guys, great session today. I love you to pieces. Hope all of you are doing well, and y'all be good. And I will see y'all tomorrow.